Hello, I'm Shaun Richards of Not a Yes Man's Economics, and what I want to talk about today is looking at a feature of the credit crunch. In particular, this applies to the UK, but some of the messages and lessons from this apply around the world as well. I'm going to look at a particular sector in the UK, which is retail sales, a lot of what the UK consumer does. Why? Well, for us in the UK, this is not only a major part of the economy, it's true elsewhere, but it's one where we've traditionally seen quite strong growth. It's both a strength and a weakness of the UK economy, if you like, that we've had that, but which has boosted the economy. But the other side of the sort of cake or cookie, however you want to put it, is one of the reasons why we run a trade deficit. Before the credit crunch era, people were quite concerned about this, looked at the numbers, and the UK marginal propensity to import in this sector was about 40%. So as you can see, each £10 of growth, £4 is going abroad. It was an issue in the trade deficit. More recently, the strong growth that we've seen in it has been a benefit. Why? Well, economic growth full stop's been hard to come by, so extra spending by the consumer has been welcome because it's been in short supply elsewhere. If we come towards the end of 2019, though, there were some other factors in play because the growth began to slow down. In fact, in the last 3 months of the year, it became actually negative. Not that common a thing in the UK, retail sales to shrink, for the reasons I've explained earlier. But some of the economics metrics are actually quite powerful and on the upswing. For example, employment continued. There were more people employed, so presumably spending. Also, the wages of people were in real terms rising in the UK. Now that's something that's been missing for quite a lot of the credit crunch era, and if you look above the broad swathe of numbers, real wages are still lower than they were before. So we don't find the answers to the slowdown there. I think we find them elsewhere. In particular, there's one feature that's perhaps a general in some countries through the credit crunch, which is there's been more of what we call unsecured credit. So that's borrowing without something backing. So not a mortgage where, say, someone would back it with their house. And in the UK, around about 2016, we saw that on quite a tear. Growth for quite a while was in double digits, above 10%. For a while peaked around 11%. So as you can see, it's a sort of like debt-fueled surge, if you like. We know that's true because the Bank of England denied it. However, now, as we look through, we see that growth there is only around 6% per annum. Now, of course, there's a caveat. That's much stronger than other parts of the economy, but relatively slower. So I think that's a factor why retail sales growth has slowed down. People don't want to borrow quite so much. On a technical note in the UK, that might go forwards more because those that follow this will know that unauthorised overdraft rates in some of a regulatory backfire have just doubled to 40%. And yes, I do mean around 40%. The next factor that's been in play has been the issue over the payment protection insurance scandal because people were paid compensation. This meant that as we come through, there was quite a lot of money that came into the economy from that route. In Lloyds Bank's latest figures, £2.5 billion was paid out in the last year, 21 billion in total. So as you can see, there was a big sum of money that I think boosted retail sales through the period. So now here's an irony for economics measures. Just as the conventional metrics look good, we find that the other factors are washing out. So we could see a spell of retail sales growth being weak for a while yet.